Unit 3, Learning Set 5, we're going to look at credit card statements. And the objective is to identify and use the various entries in a credit card statement. So this first example is just an example of what a credit card statement looks like. It's for Jane Sharp, so it'll have your name, it'll have your address, it'll also have your account information such as your account number, the billing date, and the payment due date. So the billing date is the end of your billing cycle, and then it will list transactions. So for debits, it'll be what is added. Those are the purchases that you've made, and credits would be subtraction. So these would be any payments you made towards paying off your credit card statement. And at the bottom, it contains a summary which lists what your previous balance was, what your payment or credits were, and that should match the payment transaction, in this case on January 21st. It'll add a total of any new purchases you make. If you paid your balance off late, it'll show your late charge, your finance charge for the balance you carried in the last billing cycle, your new balance, and the minimum payment you need to make. On the bottom, it also lists your average daily balance, the number of days in the billing cycle, your annual percentage rate, and some statements will list the monthly periodic rate. So that would be the APR of 18% divided by 12 to give you the monthly amount. And it also lists what your total credit line is. That is how much you are allowed to borrow on that credit card. And then the total available credit is how much you haven't borrowed yet that's left that you can still use. So in this first example, we're going to look at the summary portion of Jane Sharp's credit card statement shown above. So how are new purchases amounts, how are they determined? So the new purchases, this is going to be the sum of the purchases which appear as debits. So they are the items that are added to what you owe. And how the new balance is determined is by using the following formula. So what you would do is you would take the previous balance minus any payments that you made. You would add in any new purchases amount that you made, any late charge, and you would also add in a finance charge. So if we look up here, the easiest way to probably look at this is say our previous balance minus any payments we made off on the previous balance. You're going to add any new purchases that you've made, add a late charge if you owe a late charge, add the finance charge, and altogether that would equal your new balance. So suppose we wanted to create a spreadsheet like we've done in the past in either Excel or Google Sheets that models the statement summary and inputs the values in row 2. So we want to write the spreadsheet formula to compute the new balance in cell F2. So remember, these cell names are A2, B2, C2, D2, E2, and F2 when we're doing this. And so when we look at this, remember, our previous balance, we're going to subtract the payments, add new purchases, add the late charge, add the finance charge, and that would equal the new balance. So to get the new balance in F2, we would type the previous balance. Now remember, we always start with an equal sign in a formula on a sheet, on a spreadsheet. We want to subtract the payment, so that would be minus B2. Add the new purchases, so that would be plus C2. Add the late charge, so that would be plus D2. And then add the finance charge, which would be plus E2. So let's look at this example where we're actually going to use numbers. So Pascal has a credit line of $15,000 on his credit card. So that means he can borrow up to $15,000. His summary looks as follows. How much available credit does Pascal have? So first we want to figure out what is his new balance. So we want to take our previous balance minus our payments or credits plus our purchases plus our late charge plus our finance charge. And when we do all that with the numbers, we find that Pascal's new balance is $1,992.43. Now, to figure out how much he has left that's available for him to spend, we want to take his credit limit amount, which is $15,000, and I pulled that from the statement up here. He has a credit line of $15,000, and we want to subtract his balance of what he owes, which is $1,992.43. So that means he has $13,007.53 available that he can use his credit card for to buy new purchases.